What's up, everybody? Happy mid-morning. Unfortunately, this is not a dip by the AI kind of day. Welcome back to Trades and Gains. I'm your host, Max Pitts, as always, powered by Investor Central Club, where you can use that code SUPERMAX20 to get 20% off your first month and become a baller like me, basically. So today's market is Dow futures were down 1,200 points. Oil's up 6 to 8%. The Strait of Hormuz is basically frozen. Tech is selling off like it's selling ass on this Vegas strip. Palantir suddenly is Wall Street's favorite boy again. Wow. Talk about some interesting stories. Now the market, it's not just reading headlines or reacting to headlines. It's repricing geopolitical risk in real time. So let's start where the real stress is coming from. Brent crude is above $85. WTI, I think that's West Texas, is near $75, and European gas is up 40%. This is not the quick spike fade by Friday type of oil move. Analysts are now openly saying this time may be different. Kind of like when your ex-boyfriend comes back and says, I swear I can change this time, baby. Now, why is that the case? Because this isn't just missiles hitting symbolic targets. We now have this Strait of Hormuz, or Hormuz. I don't know how to pronounce that shit, so get off my case. It's effectively halted, though. Tankers are attacked. Insurance markets are freezing. Qatar LNG production completely paused, and Saudi refineries are shut down. That is real supply chain disruption. And roughly 20 million barrels per day normally pass through that area. The bypass pipelines, only 5 to 7 million capacity, meaning if this drags on, supply gets tight like that rusty balloon knot on your lower back real fast. And guess what? The markets, they know it. So here's the chain reaction. Oil spikes, inflation expectations rise, treasury yields will climb, and rate cut bets shrink up like you just took a popper. Tech multiples compress, and the Dow, well, it was down 2% today. S&P down 2%. It's trying to fight back up over here. You know, it's like a woman trying to get out of a violent relationship right now. It's just fighting for its life. The Nasdaq, it's down 2%. This isn't just fear, it's simple mathematics, people. If oil embeds a risk premium equivalent to multi-week disruption, inflation, well, it's gonna stay sticky, kind of like your underwear after a wet dream. And sticky inflation equals tighter policy. Even New York Fed President John Williams basically admitted tariffs already added 0.5 to 0.75% to inflation. Now, layer oil on top, and no, we're not talking about the Diddy oil. That's uncomfortable. Now, let's pivot to something a little more interesting that you guys probably care about more. Palantir Technologies is suddenly back on Wall Street's buy list. The stock plunged 38% from its highs, valuation concerns, Michael Burry criticism, and ICE contract scrutiny. And now, well, it's upgraded everywhere. 20 of 31 analysts now rated a buy. Consensus target implies 30% upside. Now, why did this happen exactly? Well, because about half of the Palantir's revenue comes from government and defense contracts. And when war escalates, defense analytics demand doesn't shrink. It expands, it widens. The company already has a $100 million Maven Smart System contract, a $10 billion U.S. Army contract, deep military integration, and this conflict doesn't change fundamentals overnight. It validates their moat. That's why the stock rallied 13% in 4 sessions before today's broader sell-off. It's positioned to thrive in disruption, and like a unicorn, that's rare. Meanwhile, Nvidia, was down 3% today. Semis are broadly weak. Rumors of China export caps and memory names got hit hard. When inflation risk rises, high multiple AI trades struggle, even if fundamentals are intact. This isn't AI is dead. It's duration risk. The higher yields go, the more future cash flows get discounted. And that's the key pressure here. Now let's talk about Apple again. And no, I'm not talking about the iPhone 17e or whatever flaccid product they just announced recently. They did, however, roll out a MacBook Air with M5 chip, M5 Pro, and M5 Max chips, higher base storage, and higher base pricing. The MacBook Air now starts at a very affordable price of $1,099. What about that? And the Pro models are now pushing $3,000 to $7,000. That's what we like to call margin defense in this retail game, ladies, all right? They're leaning into AI processing power, on-device LLM acceleration, and premium positioning. But IDC projects global PC shipments down 11% this year. Revenue may rise, units will likely fall, however. This is pricing power versus demand sensitivity. Apple is basically betting premiums win. Now, let's talk about safe havens and rotation. And no, I'm not talking about when I throw it in a circle on stream. Gold is near $2,500 again. Dollar is stronger. VIX is spiking, and energy stocks are leading. Decliners outnumber advancers 17-1. Cruise lines are down 6%. Travel's weak, and cyclicals are, well, they're under pressure. This is textbook geopolitical shock rotation. Energy up, defense up, travel down, discretionary down, and higher beta tech is down. The market isn't confused like a bisexual high school teenager, it's reallocating. So here's what matters now. Is this A, multi-week disruption priced quickly and faded, or B, a structural shift in global energy flows? Leave your answer in the comments below. I will be grading your tests on Monday. If Hormuz stays frozen for weeks, Brent could see $100 to $120 a barrel. If that happens, inflation resets, growth slows, risk assets reprice lower, and if flows normalize, we likely see a violent relief rally. The duration matters more than the headline. Now, this isn't 2022, people. This isn't a tech bubble implosion. This is geopolitical supply shock, risk meeting a market already stretched on valuations. Palantir thrives, energy thrives, defense thrives. High multiple AI, well, they need yields to calm that ass down, bye. The real tell will be oil into the close, bond yields into the close, and whether buyers step in late. Because right now, markets are basically just pricing uncertainty. And uncertainty, just like having a baby mama, is expensive. Anyways, I'm Max Pitts. This was Trades and Gains. This is your midday market update. I hope you guys have a great trading day. Again, use that code SUPERMAX20 over at InvestorCentralClub.com to get 20% off your first month of the best options flow software you can get in the game. Also, come join us on Twitch at Free Wi-Fi Radio, with radio, the O in radio being a 0 and not a O. I'll see you guys in the next video. Love you, and stay safe. Wear a condom. All right? Have a good one.